ever place a trade thinking that the trend will continue in your favor, only for the market to suddenly reverse and smash your stop loss? What if I told you that the problem is not your luck, or that trendline breakout strategy do not work, but the problem is that you have been entering too early, and that's why you keep getting stopped out each time you buy or you sell? So today I'm going to be showing you simple trendline breakout strategy that will completely change how you enter this trade. And the best part is that it works even if you're a complete beginner. Because I know you have watched several videos about trendline breakout strategy that teaches a lot of things, but trust me, what I'm about to show you in this video is a simple secret and how to avoid this simple mistake. Even professional traders do make it. So if you don't want to miss out, make sure to stick to the end of this video. So without further ado, let's just dive into it. Hello traders, welcome back to my channel. So if you have been struggling with catching the right entries and avoiding false breakout, this video is for you, because at the end of this video I'm going to be showing you how to accurately draw trend lines and how to identify real breakout from the fake ones. And last but not the least, how you can be able to enter this trade with so much confidence so you can be able to manage your risk like a professional trader. And of course, I'm going to be showing you real life practical example so that you can be able to backtest this particular strategy even after watching this video. Okay, so if you don't want to miss out, hit the like button so YouTube can recommend this particular video to trendline traders who are struggling with this particular strategy, so they can watch it and it will be beneficial to them. And hit the subscribe button so you will not miss out on strategies like this. Before we even talk about breakout, you need to know how to draw a proper trend line. Okay, now trend lines are like the walls of a price movement. They show you where the market keeps bouncing. Okay, so to draw one, you must first of all understand the trend. So for an uptrend, you must connect at least two higher lows with a straight line. So in a downtrend, you must also connect two lower highs in a straight line as well. Let's just dive into the chart. Let me show you exactly how to draw a proper trend line. With this chart like this, you must first of all identify the structure of the market. So how do you identify the structure of the market? The market will be giving you a bullish movement, creating a new highs and lows, which is higher highs and a higher lows, right? So what you need to do in this case for you to draw a proper trend line is that you pick your trend line tool and you start from the extreme lowest of the higher low of that particular trend, right? You connect from the extreme low, that swing low of that particular trend, then you connect it down to what? To the last one. After connecting to the last one, if you look closely, we have more than one touch on that particular trend line, right? We have more than swing lows, which is called the higher lows, right, on that particular trend line. So like for a trend line to be a valid trend line, it must connect more than what? Two lows on that particular trend line. The higher the touches on that particular trend line, the stronger it becomes until it eventually breaks, right? Now for you to be very strong, you must see at least 2 to 3 upwards. The fourth to fifth one is most likely to be the one that is going to break the trend line. So if you look closely, we have how many touches here? We have first touch, okay, first one, and second touch, making it second. Okay, we have third touches here, and we have the fourth one here. So originally we are anticipating for this particular trend line to break. Okay, that's what we are anticipating. But first of all, we have already connected it, making this particular trend line a very strong and a valid trend line. Okay, so you can see, and since it touches, for every touch the market touch this particular trend line, it creates a new higher high before coming down on a pullback to bounce on that particular trend line. On how to know when the price of this particular kind of market will potentially break the trend line is to look out for the last swing high, which is the last higher high, right? Now the last higher high we have here is this one. Okay, is this one we have here, right? So after the market bounce on that particular trend line to push up, we anticipate for the market to take out this particular higher high to create a new high so that the trend will continue. But unfortunately, the market bounced here after the bounce we have here. So the market failed to take out this particular higher high to create a new high. So this becomes an equal high. So whenever the market creates an equal high, failure to take out this most recent one, the most recent high, that means we are anticipating for the what? A potential breakout. This is one secret you should note. Okay, this is one secret you should know. So if you are a trader that is maybe looking for buying opportunity in this market, once you already notice these things I say in this video, this particular thing I say in this video, the market giving you an equal high on that extreme higher high, right? What you should know is this: anticipate for the breakout. So any buying opportunity here is very, very risky. So what you should do here as well is that you wait for the market to know what is going to happen on that particular bounce, on the next bounce on that particular trend line. So let's look at what the market did on that trend line. Okay, you can see what the market did here. The market eventually break that particular trend line. So, but then again, this one mistake most traders do make. Okay, immediately they see this trend line break, immediately the price touch that trend line and breaks it, they immediately enter the market and start selling like this, because obviously when the market breaks this particular trend line, we anticipate for market structure shift, which you can catch the earlier move of market structure shift at the earlier stage, and you can catch a lot of pips. Okay, so but it's very, very wrong for you to enter immediately after the breakout. Why? Because this might serve as what? As a false breakout to clear liquidity. So what is liquidity? So for you to actually know when and how the market reacts to this particular breakout, what you should do is this. You should wait for what? You should wait for the market to not just take out this particular low here, but also take out this one, because this one might be serving as a liquidity that market need to grab and clear off liquidity to react to this demand level. This demand level is also serving as what? As a support level. You can see it's acting as a support level. Right? Immediately the market have already taken it out. What you should do next is to wait for pullback. Now let's see what the market did. So the market immediately bounced on that particular support level. Then after the market bounced on that particular support level, eventually it take out this particular low we are seeing here. The market finally take out this particular low you are seeing here. So that means we anticipate for what? A trend shift. The market is about to make that trend reversal. So what you should do is very, very simple. You actually need to look at for that particular reaction the market did in this particular type of market. So since the market are breaking that particular line, okay, you should wait for pullback. I'm waiting for pullback. You should now connect to that. You should now use that particular candle, that particular demand candle that the market finally broke. You map it out like this. Map it out like this. Okay. When you map it out like this, all right. So after mapping out like this, then you now wait for what? A pullback, which is a retest, a reversal. Okay. When you wait for the reversal, let's look at what the market did. Okay. Now you can see the market eventually reverse upwards, okay, to react on that particular initial breakout. Now, in this case, you now wait for confirmation. Market will give you a confirmation that yes, the sellers have taken over, or they potentially want to take over the market to start selling, because you have a trend shift, okay, a trend reversal, a breakout that will now lead to what? A market structure shift. You don't just enter the trade when the market reverse. You need to see a strong candlestick confirmation like doji, okay, or bearish engulfing, or even a pimba. Now let's look at what the market did here. So you can see the market already given us a weak rejection here. You can see the market gave us a double rejection, okay, double rejection here. So once the market have given you double rejection, you should be anticipating for what? For a sell. Then you should not do anything when the market give you this kind of doji rejection. So wait for the next candle to close. Immediately the next candle close below this particular doji, then you look for selling opportunity. See, look at what the market did. So immediately the market closes below this one. So this is where you want to what? Enter the market, enter your short position. Okay, enter your short position, or enter for a sell. Okay, you enter for a sell and your stop loss above the candle like this. Then your take profit level. This is where the magic happens, because most of the time, most of them don't know where they take their profits. Now you can equally use all these bounce you have on the on this trend line, all the higher lows that bounce on the trend line to create a new higher highs. You can use them as your take profit 1, take profit 2, take profit 3, but it's not guaranteed that it will reach to the extreme higher lows for your full take profit. It's not guaranteed. So once you have achieved 3 days to reward, you are okay by that. You don't need to be greedy. So you are using this one, the first bounce as take profit 1, which is this one, the first bounce, this bounce here as your take profit 1, okay, 0.2. Then the profit 2 should be this particular bounce, this one you're seeing here, this particular bounce on the trend line, okay, should be your take profit 2. Then if you want to now consider taking, drawing down to the extreme low, you can use this one as your take profit 3. Okay, as a final full take profit, which is final full take profit. You can see the massive risk to reward here. This is like 10 risk to reward, 10 risk to reward, right? Okay, but then again, it's not a guarantee you must wait, because most of the time price might not reach that particular final take profit. Yes, price might not, it's not a guarantee that price might reach that particular final take profit, but once you have realized 3 risk to reward out of this 10, then you can, you know, exit the market. You should be okay by that, right? Now let's look at what the market did, right? You can see the market keep going down. You can see the profit 1 has been smashed. Okay, the profit 2 has been smashed again. All right, look at what the market did, or look at what the market is doing. Okay, you can see final take profit has been smashed. Okay, final take profit has been smashed. We have already made 10 risk to reward on this particular trade. For the case of a downtrend, when the market is pushing downward, giving you that downward movement to the downside, then eventually we anticipate for a market structure shift from down to up, from downtrend to uptrend. So what you should do here in this case is that when the market is giving you that structural movement to the downside, you should connect what? The lower high. Okay, the lower high, as much lower high as possible, like as many as them as they appear in the market, right? Now when you connect it, it makes it very, very strong. For you to make it very, very strong, you must look for at least more than 3 lower high connected on that particular straight line. Okay, like this one you are seeing here. So we have how many of them right here? We have the first touch on the straight line, the second touch on the trend line, and we have the fourth touch, the third touch on the trend line. So this makes this particular trend line a very strong trend line, connecting multiple lower high on the straight line. And if you look at it, it is moving to the downward direction. Okay, the fourth one, we anticipate the fourth one to finally break the trend line. Now let's look at the reaction. Remember, we have this particular lowest low here, this particular lowest low. So we anticipate the market, once the market reacts, bounce on the particular trend line, we anticipate the market to eventually take out this particular lowest low to form another new lowest low. But what happened here? The market failed to form another lowest low, giving us an equal lower low here and equal lows. These are equal lows. So you anticipate for a break on the trend line. Remember, this is how to know a potential breakout that will possibly happen. So if you're looking to start selling in this type of market, it is very, very risky, because you may end up, you know, getting stopped out in the market because of this ignorance. So let's look at what the market did after connecting this particular trend line, making it a very strong trend line. Okay, now look at what the market did. So immediately the market actually did something like this, breaking with this candle on the particular trend line, this particular trend line. As a trader, you shouldn't enter like this. Like I said, this might be a sweep. Wait for the market to finally break out this particular lower high. This particular lower high must be taken out, not this one. This one must be taken out, because this one is serving as a liquidity the market needs to still grab and, you know, react to this particular supply level to start selling again. So you must wait for this one to be breaking to break out before you make a decision here. Okay, now let's look at what the market finally did. So eventually the market have already broke out this particular lowest high. So what you need to do here in this case is to draw that, start from that candle, the candle that makes up the supply level. You draw it like this. So in this case, you wait for reversal. Okay, on reversal, and this is where you now look for your buying opportunity, so you can catch the trend shift at the earliest stage. Okay, this is one of the most profitable strategy you can ever catch, even as a beginner trader. All right, now let's look at what happened next. So the market retraced back down. Okay, when the market retracing back down, this is when you want to look for your entry opportunity. And how do you look for entry opportunity? You look for strong candlestick confirmation, like bullish engulfing, you know, hammer, a strong hammer, or even morning star most of the times. Okay, so look at what the market is doing. The market is still, you know, dropping down, but then look at what is happening here. We're having multiple rejection, weak rejection. We're having multiple weak rejection, like 1, 2, 3, 4 multiple weak rejection. So in that case, the market will most likely start pushing up. So this is where you now wait for next candle that will close. Any candle that close above this doji, okay, look for buy. So you look at it, we have this hammer. This is a hammer indicating a bullish momentum. You can see another hammer. This is a hammer indicating a bullish momentum. In this case, you start looking for buying. You can enter the market immediately. Okay, you can now start entering the market like this. Place your stop loss somewhere like this, and your take profit level. Your take profit level should be all the previous bounce on the trend line, all the previous lower highs bounce on the trend line. Every lower high that bounce on the trend line, okay, the first one, the least one to the to the middle one to the last one should be your take profit level. But then for you not to be greedy, you might decide to look for what tail risk to reward ratio in this case by looking for what the middle bounce to be your take profit 2. So you don't need to be greedy, right? So you just look for this one to be at the profit level on this particular this particular one right here to be at the profit level. In this case, you can catch up to what 400 pips, up to 400 pips in this case, right? So remember, you don't need to be greedy. Just take this to reward. You can exit the market, but if you still decide to hold the market until you hit your full take profit level, then fine. But then you should manage your risk properly. Now let's look at what the market still did at the end of the day. Okay, so the market hit take profit 1, take profit 2, and finally smashed full take profit. The market finally smashed full take profit. You can see exactly what happened here. The market finally smashed full take profit level. So there you have it. This is a simple but very powerful trendline breakout strategy that can completely transform your entries, how you enter and how you trade the market. So if you find this helpful, don't forget to smash the like button, subscribe to this YouTube channel so you will not be missing out on some important trading strategies like this that are going to help you become a profitable trader. Drop a comment in the comment section. See you next time.